Alright guys, this is Gregory and I'm back, and this is a chart of the Aussie US dollar, so 1 hour chart. I just pulled up a random chart. Alright, so basically, actually before we get started, just let me pull up a few things. Alright, there we go. Now these little horseshoe looking things, these gray U's, these are fractals. And this is what a fractal looks like on this particular platform. And so basically, remember what we were saying. A fractal has two to the right and two to the left, right? So for instance, this high is not official until we have two to the right and two to the left. And that's what we have. Two to the right and two to the left. Two lower highs to the left, two lower highs to the right. All right, pretty simple stuff. Here, same thing. We have the fractal, two to the right and two to the left. So these are the defining structure of the highs and the lows. And if a high and a low forms and it does not have this type of formation, this fractal formation, then technically it's not a high, or technically it's not a low. So how do we use this information in real trading? Well, as you can see, remember before I was talking about support and resistance, and I was saying how if you do your price wave model, if you do it long enough, you will see how these highs and lows start to converge. So, for instance, we have resistance here. You can see that pretty easily there. You can see it here. Okay, you can see how everything is converging. So these are pretty much key areas where you expect prices to at least to be respected somewhat. We have the same thing here. We have respected price, which is a resistance, and then market falls. So the situation right here where you see that you have previous support that turned into resistance and it held, okay, and market pulls away and formed a fractal, and we got back to that area, you can see how this particular failure happened. Okay, you can go short, and you can actually sell on a touch there if you want to be slightly more aggressive. But as you can see, the market falls away. So now the high is confirmed once we have two to the right, two lower highs. We have two lower lows to the left. Okay, so this pattern exists over and over again with slight variations, but the main principle is two to the left and two to the right. Okay, and it's amazing how this particular formation just happens over and over again. You can see how we have the two highs here that's converging around the lows here, so that's support, and you can see that once we got to that area again, that was a good opportunity to buy. So for instance, let's say you're thinking about buying around this area because you knew that the previous resistance turned into support, and once we got to that point again, so you said, well, I'm going to have a low risk buying opportunity. But let's say you're a little tentative and you didn't want to buy until you had some type of confirmation. So once this bar comes in and a fractal forms, because you got two to the left and two to the right, now this bar has to close before this fractal is confirmed. Because what may happen is that price may come down further and basically eliminate the fractal. So it's not until this bar closes to where it's confirmed. So once it's confirmed, you had a fractal at a previous support area, then you can go ahead and buy, and you can place your stop beneath the next fractal, which is right here. Okay, and then you just watch it go up, and you go towards another resistance, and that resistance is around this area. So as you can see, this pretty much appears over and over again. It is pretty much how the highs and lows are established. I mean, we can go back as far as you want. It really doesn't matter. So I'm just scrolling. See how far back we go. Okay, here we go. Same thing. These fractals are nothing but highs and lows. So we have a high, we have lows here, low here, we have a low, high. So once you start to develop your eye and you start to understand the rhythm of how things are developing, now these become price waves. Now you can see how these highs and lows are connected. These are nothing but price waves now. So for instance, we have this low, we have this high, we have impulse wave, we have a retracement wave, we have the impulse wave, We had a retracement wave, but now we're starting to go sideways. It takes out the previous high, but it gets rejected and price comes down, which is okay. It comes all the way down. Now this high gets taken out, which was a previous high. According to the price wave model, the market comes back. We have established support here. We have a fractal that develops. So let's say if you miss this opportunity to gain it. So now that this fractal has been established, we have an established low. Now you can buy. Because remember, we had a down impulse, retracement, impulse. Now we broke the previous high. Okay, so now we have a trend reversal according to our price wave model. So now this is where we buy, and we continue to process to the upside. Okay, let's say you're buying retracements. You want to buy these retracements, but you don't know exactly where it's going to stop. I'll show you that later. But let's say you're not as skilled, and let's say it comes down to the 61.8%. You say, well, I'm not sure if I want to buy yet. But now you say, okay, I'm going to buy now because we have a fractal that was established right here. So I'm going to buy. Then I'm going to place my stop beneath there and manage my risk accordingly. And so let's say you get in around here, and a few hours later, the market rallies up. Okay, because now you're safe now because now you have a fractal that was already established at a Fibonacci number. So there's different ways that you can play this. I mean, you can become creative. It takes time, but once you understand how things work, you become creative and you come up with your own ideas. You start selling and buying at support and resistance. You'll start buying at Fibonacci retracement areas where you start to understand. You're going to look for convergence with supply and demand and support and resistance and Fibonacci retracements and all this other good stuff. And then you're going to start throwing in pivots and you're going to start throwing in average daily range. And now all these things are going to start making sense to you. And then you're going to start seeing these formations that occur around those levels. Then you're just going to be more confident in your trading because now you know that, okay, I have a fractal at a convergence of a pivot and a retracement number. Well, this is a highly likely place where a low is going to be established. And then you see that, you see the formation form, then you're good to go. You get into the trade and you place your stop beneath it and you're ready to rock. So this is just one example. It's an easy indicator. It's already on there. This is a MetaTrader platform. All you have to do is let me actually just exit this and the indicator button. Here we go. Yeah, and Fractals is already up there. It's already standard. So you just click on Fractals and this will appear on your screen. And you can start practicing. So I hope this is very beneficial for you. Just take the time and practice. Look at, I mean, this even exists on 5-minute charts. So we were looking at an hour chart. This is a 5-minute chart. It's the exact same thing. I mean, it doesn't change. That's why we call it a fractal. It's a self-similar pattern that exists on any time frame. Big or small, it doesn't matter. Let's see. Yeah, same thing. Same thing. Support, resistance, highs and lows, fractals, it doesn't matter. All right, guys, this is Gregory, and I'm going to sign out here. So thanks for tuning in, and the next lecture is going to be about candlestick patterns. So definitely tune in for that. All right, take care, guys.